Hello YouTubers, and let's talk about Ray Dalio all-weather investing strategy. So per Ali Montag on CNBC.com, article billionaire investor Ray Dalio shares his #1 tip for new investors. For young people who would like to put their money to work in stocks, billionaire investor and Bridgewater Associates hedge fund magnate Ray Dalio, #1 piece of advice is just get started. First, know how to balance your portfolio so that you don't have any systematic bias toward bull or bear markets in anything. Think about how to rotate your portfolio to buy that which is cheap and sell that which is expensive. D.M. Martin's research on seekingalpha.com, what Ray Dalio's strategy may teach us about long-term investing. In his interview with Tony Robbins, Ray, using his trademark simplicity, laid out the exact asset class allocation that an unsophisticated investor can replicate to achieve results that are similar to those of Bridgewater's all-weather fund. The allocation is very simple. 30% in equities or stocks, 40% in long-term treasuries, 15% in intermediate-term treasuries, 7.5% in gold, and another 7.5% in diversified commodities. Per Tony Robbins, calls this a all-seasons portfolio. So, per Evan Robaugh on seekingalpha.com, duplicating the all-weather fund using low-cost ETFs. We look at this, and per this article by Evan, he used Vanguard's BLV, Vanguard long-term bond, as the 40% long-term bonds. He used Vanguard VOO, the S&P 500, as the 30% stock. He used Vanguard's VIV as the 15% intermediate term bonds. He used iShares Gold Trust IAU as the 7.5% gold, and PowerShares DBC as the other 7.5% for commodities region 100%. So per Evan's article that we talked about, you have to balance the risk, not the asset. The large percentage allocated to bonds is a surprise to most, but the reasoning behind it is based on balancing the percentage of risk rather than the percentage of money put into each asset. Stocks are 3 times more volatile than bonds, so putting a higher percentage into bonds balance the risk in a way that putting 50-50 stocks and bonds would not. So again, all-weather portfolio, 40% long-term bonds, 30% stocks, 15% intermediate term bonds, 7.5% in gold, and rounding out 7.5% in commodities. Thank you so much for watching. Please like and subscribe. Comment for what you would like to see next.